In 2020, the Canadian real estate market started out with expectations of price increases and record sales numbers. And then this little pandemic hit and put everything on pause. We saw forecasts start to come out of massive declines in the number of homes sold in the year, and prices for the first time maybe ever in the Canadian real estate market were going to decline, and by a substantial amount. And yet, when the year finished up, we saw a huge number of homes sold, in some places record sales numbers, and prices increased over 15%. How is this possible? We're going to break down on this episode of Bald Prairie Real Estate market hype versus market reality. Hey everyone, welcome back to another episode of Bald Prairie Real Estate. If you're new here, my name is Matthew Pfeiffer and I like to educate you about the Canadian real estate market. I do monthly market updates as well as educational videos all about the Canadian real estate market and buying and selling houses. So if you like this type of content, hit the subscribe button so you're never gonna miss out on my videos. And if you really liked it, give this video a thumbs up. The 2020 year came in with strong expectations for the Canadian real estate market, especially in areas like Toronto, Vancouver, and Montreal, where they were expecting very strong sales and prices to increase once again. And then of course, in early spring, right in the busiest time in the real estate market, we hit a pandemic and a complete lockdown for the most part for the real estate industry. We weren't allowed to do showings, inspections, offices were closed. Basically, everything hit pause. And of course, with that came some pretty dire predictions of economic recession, and the real estate market was going to come crashing down. We saw very negative forecasts and predictions came out in the early spring. But then we saw the exact opposite for the most part in the Canadian real estate market. So on this video, I want to break down all those different expectations of what was going to happen. I'm going to call it hype. And then we're going to talk about the reality of what actually happened. We'll wrap things up as well with a quick sneak peek at my 2020 Canadian real estate forecast video so you can have an idea of what the different expectations are for your market. But of course, we can't start this off without another terrible joke. Do you know why elevator jokes are so good? Because they work on so many different levels. Probably the biggest hype for the 2020 Canadian real estate market was how bad it was going to be. In early spring, there was a ton of forecasts that came out that talked about how much sales and prices were going to decline in 2020 because of this global recession, pandemic, everything else that was going on. Moody's was one of the most negative. They talked about a 30% decline in home prices across Canada. CMHC came out, talked about a 30% decline in the number of homes sold and up to an 18% decline in the average house price. TD Bank, interestingly enough, they projected a 6% increase in house prices. Everybody on YouTube and every news outlet, every economist, they all talked about how bad it was going to be, and it was just a question of how bad. Everybody said it was going to decline, it was just by how much. Well, as 2020 wrapped up, we saw average prices in Canada up 15% nationally, driven of course by single family homes, and cottage country also saw a big bump, while the downtown apartment market obviously saw some weakness. So those dire predictions of those massive price declines in 2020 didn't come anywhere close to being accurate. And that is of course the danger of trying to make some forecasts early on when things are changing so rapidly, so quickly, and so much is unknown at the time. No one, and I mean no one, got a prediction that real estate prices were going to increase 10, 15, or 20%. If somebody did, I'd like to see that person that predicted that accurately in the early spring. We quickly saw a massive spike in unemployment as millions of jobs were lost in Canada. And everybody was talking then about what type of recovery Canada was going to have and how long it was going to take. You know, what type of curve. There was like the J curve, the V curve, the K curve, and probably a Q curve or something like that. But everybody had a different projection of what was going to happen. These millions of people who are unemployed were of course not going to be able to pay their mortgages, and they were going to have to sell their house, and there wouldn't be people to buy houses because they didn't have jobs. So this significant economic damage was expected to spill over into the Canadian real estate market because people just simply couldn't afford their homes or couldn't afford to buy a new house, even if it was up for sale at a cheap price. What ended up happening was a fairly quick and strong recovery, with about 85 to 90% of all jobs lost recovered in a number of months. As we finish up 2020, most of job losses have been recovered. Of course, tourism, hospitality, the service industry, all those got hammered really hard, and those haven't recovered, and I don't expect those are going to recover until we get back to, I don't know, more normal, I guess we'll call it. But the job losses were also very unequal in nature. They hit part-time and younger workers much harder than homeowners with careers, salary employment, things like that. And that is one of the major reasons why we didn't see a huge fluctuation in the real estate market, because homeowners weren't forced to sell because they didn't lose their jobs or it was very temporary. But either way, the recovery was, I think, a lot quicker than most people expected. And that quick recovery was what prevented a lot of damage to the Canadian real estate market. Another big real estate hype is that markets, well, they're cyclical. They go up and they go down, and we're at the top of the market because prices cannot increase forever. Some of the factors we've just talked about are going to be the reason why finally the Canadian real estate market is going to come crashing down. You've heard a lot of people talk, well, we just need to look at a long enough time frame, because too many people look at this in a short time frame. If you look long enough, the markets are cyclical. So of course, this is the peak. Here's a couple of graphs to show you. This is the peak. Now it's going to be on its way down. And of course, as a real estate agent or realtors in general, they're not going to tell you that the real estate market's going to crash because it's in their best interest. Just hold on to that thought for just 1 second for me. Thanks for holding that thought. Of course, prices would never decline, and I, as a real estate agent, would of course never tell you that they're going to decline or that they are declining, because it's in my best interest to make sure you don't know that. Except in, Toronto, Vancouver, Calgary, Regina, all had price declines in the last decade or even sooner. So yes, the real estate market is cyclical. We will see ups and we will see downs. I swear there are some websites and channels out there, they're solely dedicated to telling you that this is the year that the real estate market is finally going to crash. They're going to show you a pretty graph or a chart from history, something like that, that this shows exactly why this is the year that the real estate market is going to crash. And then when it finally does, when we do finally see a price correction in the real estate market, they're going to say, see, I told you this was the year, even though they'd predicted that 5 or 6 or 7 years in a row now at this point. If you project long enough and say, well, at some point in the future, prices will decline, you will be right, because real estate markets are cyclical. We will see prices continue to increase, and then we will see prices decline, and the cycle will repeat again. And if I think prices are going to decline, I'll tell you that. If I think prices are going to increase, I'll also tell you that too. The mortgage deferral cliff, that was it. That was going to be finally what pushed everybody over the edge. This was a theory that came out late in the summer, and it was talking about how September, October, November even rolled around, and all these mortgage deferrals that had been given out. And one time there was something like 16% of all mortgages in Canada were in some state of deferral. Well, when those came up, people were just obviously not going to be able to go back to paying their mortgages. They were going to be forced to put these houses up for sale. There would be a huge wave of foreclosures. And this was going to cause things to cascade, especially because pent-up demand was going to start running out, and we would see the market flooded with houses. This deferral cliff was really going to be a big problem for the Canadian real estate market. This was what was going to push over the edge and cause the real estate market to crash. This was probably one of the biggest dud headlines of 2020, and that was the mortgage deferral cliff that was going to sink the Canadian real estate market. The mortgage deferral cliff of September, October came and went, and absolutely nothing happened. We did see mortgage deferral rates, I think, as high as about 16%. And yet when the deferral deadlines came up, everybody went back to paying their mortgages for the most part. Deferral rates are very low now at this point, because for the most part, people just went back to paying their mortgages. Some of the income supplements did help them along, but a lot of homeowners, like I said, didn't lose their jobs. So they just went back to paying their mortgages when that came up. Now, I do expect that we will see an increase of mortgage delinquency rates as people who are behind on their payments. This is not over. We are going to see this impact people, but it's not the catastrophic meltdown that was predicted in some of the headlines. And even now I've started to see headlines talking about how deferral rates are up 23% nationally. And that's a significant number to be watching. But when it goes from 0.2% to 0.21%, That's not a massive amount of mortgages in delinquency at this point. So we are gonna see some of those delinquency rates go up, but it's not gonna be that catastrophic meltdown. It's all just pent up demand. That was one that we heard once we started to see a little bit of a recovery in the real estate market, that, well, it's just people that couldn't buy for the last couple of months. Now they're buying. Everything will return back to normal. And of course, as soon as we hit that mortgage deferral cliff, the pent up demand is gonna have subsided. So that's when we're gonna see the Canadian real estate market really start to come down, because people aren't gonna be buying as much anymore. There's gonna be that big surge in listings. So don't read anything into these sales numbers for the last couple of months. It's just pent up demand. It's just a blip on the way down to this Canadian real estate market crash that is coming. For the first few months, this theory of pent-up demand made a lot of sense. I was run off my feet for the first couple of months of kind of the reopening, with a lot of buyers that were wanting to buy that just put things on pause. So yes, that made a lot of sense. But then even as the year continued to wind down, we saw really strong sales. October, November, December were all well above most cities' averages and the year before. So there was more to this than just pent-up demand, because if you look at now that the year is over, most cities in Canada saw sales numbers equal to or greater than the previous year. And some cities, like mine in Regina, we broke 5-year averages. So there's more to this than just pent-up demand. There are a lot of people that still want to buy houses in Canada and have the ability to buy houses in Canada. I left this one to the end because it's probably one of the most common comments I got, and that is that interest rates are all that's driving the real estate market. It's all that's keeping things afloat right now. Of course, as soon as things started with the pandemic, we saw a drop in interest rates almost overnight. Mortgages went from about 3% to almost immediately went to 2%. And now you can get a mortgage as low as 1%. I've done a video on that. You can check that out right there. But it's just those low interest rates that are keeping the mortgage and real estate markets alive, because it's allowing more people to enter the market with those lower interest rates, and those that are already in the market can spend more and increase their bids in those bidding wars because they're able to afford more with those low interest rates. So on the surface, lowering interest rates as much as they were, by in some cases 50%, would of course be the reason that we would see a huge spike in sales. Those buyers who weren't qualified are also now qualified because of those lower interest payments, and those that were already qualified can spend even more because their payments don't go up nearly as much with those lower interest rates. We figured it out. That's it. That's what kept the real estate market afloat in 2020. Except that's not really true either. If you're looking to buy a house in Canada, you have to qualify on the stress test. This was a program put in place in 2016 in an effort to cool down the real estate market, but also make buyers prove that they could withstand higher interest rates. So what it was, in a quick nutshell, you had to qualify on 2 full interest points higher, 2 full percentage points higher than what your quoted rate was, or there was a fixed rate. It floats around a little bit. When we started 2020, that stress test rate was 4.99%. So with most mortgages already being right around 3%, the 4.99 was already higher. So they were qualifying on that. What is it at the time of this recording in the first day of January 2021? 4.79%. So while interest rates dropped by 50% in some cases, or even a little bit more, the stress test dropped 4%. In other words, a buyer could afford 4% more, or there was a few more people because they were just on the cusp of not being qualified who were now qualified. So interest rates absolutely make your payments lower and the cost of borrowing lower, but it doesn't change much for qualification in Canada because of the stress test. Now you want to see the real estate market go crazy? Change the stress test qualifications. That will have the real estate market go bonkers. So what does 2021 hold for the Canadian real estate market? Well, here's a little sneak peek of what I've got coming up in a couple of weeks. What I think we're going to see is strong demand through 2021. And here's why. I think we're going to have a return of immigration. Immigration numbers are projected to be very strong in 2021, 2022, and 2023. We're going to see the return of international students coming back to the various universities across Canada, and tourism is going to return. And I think a lot of this is going to come back strong in the back half of 2021. And that's why I think we're going to see continued strong demand and growth in the Canadian real estate market. But that's just a sneak peek of what I'm going to have. I'll break down all the different bank forecasts, the economists, and all the different real estate companies, what they've got to say, and add some context to that. I think I'm gonna do this as like a YouTube premiere where we can all watch it together. You guys can ask me questions, kind of Q&A in the comments live. So if that's something you're interested in, let me know in the comments below. If you wanna know where the Canadian real estate market is at right now, here is my most recent Canadian real estate market update video. So you know exactly what's going on in your market. I think this is the most comprehensive Canadian real estate market breakdown on YouTube. If you want to know, as a first-time home buyer, some tips, tricks, help you purchase, or just answer some questions, right here is my first-time home buyers playlist. Going to answer all those questions for you. And as always, guys, thanks very much for watching.